What's going on, guys? Welcome back to another video. In this video, I've got another incredibly important AMC update to bring all of you this Saturday afternoon. So what we're going to be talking about in this video is the potential for a massive gamma squeeze to be coming in AMC's near future. So we've been talking about these June 18th, 2021 expiration dates and the strike prices that actually make up this date for a long period of time now, and we are finally almost at this big week. So we're going to go over exactly what a gamma squeeze is for those of you who do not know, how it affects the share price, and what specific strike prices are providing the most opportunity for us to have a very substantial gamma squeeze. Now, in addition to this, we also have a very important catalyst coming up on June 21st, 2021 for AMC and the whole entire market as a whole. Now, this has to do with these automatic or automated margin calls that would really help us out in getting this short squeeze situation kicked off. But again, we are not in the squeeze yet. The run-up that you guys can see on my screen was due to a massive FOMO and gamma squeeze rally. So before we get into all of that information, if you enjoy the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people as possible. And the more people that we have staying up to date on accurate and up-to-date information for AMC, the stronger our community becomes. And if you guys would also like to earn 2 free stocks with Webull, valued up to $1,850, make sure you check out that link down below in my description. So when we're looking at the chart of AMC, we obviously saw that massive run-up, but we did end up closing, not yesterday's Friday, but the Friday before at about $47 a share. Now, this week, we closed at about $49.40. This means we won another week. We were green on the week. We caused the hedge funds who are short AMC to take even more losses, and this is just the beginning. Now, I also want to bring up Ortex again because they did actually add something pretty interesting to their platform, as all of these yellow bars highlighted right here are tracking the failure to deliver. So the most up-to-date information that we have for these FTDs is about 6.9 million shares that were failed to deliver. Now, I am expecting this number to massively spike, and here is the reason why. So, over the last 2 weeks, we have seen a massive rally in AMC's share price. We saw even one day with almost the most options volume that we have ever seen on our markets, and AMC made up about 11% of all of that volume. Now, a lot of people were exercising their options contracts that they have bought, and the institutions that have sold you those options need to actually go out on the open market and buy shares at market price to deliver them to you at the strike price, and people were not actually getting those shares. So I am expecting to see these FTDs massively spike. So now let's get into this gamma squeeze situation. So when we come over to Stonko Tracker, this is going to be a pretty good resource to track how many call option contracts are in the money at the current time. Now, for June 18th already, if the price were to just stay where it was throughout the remainder of this week, we have 414,337 call option contracts that are already in the money, meaning that there is a possibility, a theoretical possibility, that the institutions that have sold you these calls would need to go out and buy about 41 million shares of AMC in order to deliver on their obligation. But we're going to get into more details on this in a little bit. So coming over to the option chain, let's see what actually makes up that 400,000. So when we come and look at these 40s, there is about 107,000 contracts that are being held in people's brokerage accounts at the current time for this $40 strike. Now, previously, we saw this number as high as 225,000 contracts. Once AMC got to those $70 levels, I would not be surprised at all if a lot of people started to exercise those contracts, meaning they said, hey, they said to the brokerage, hey, I would like to exercise this contract. I'm going to give you guys the $4,000 in order to buy the stock at 40, and you need to deliver me those shares. Now, at the same time, a lot of these $40 strikes could have already been delta hedged for. So let's take a look at exactly what delta hedging means. So a very brief understanding and a summary of what delta hedging is that when you sell a naked call, you essentially have a position that the potential max loss is unlimited. Now, the only way to cover that position is to either buy an options contract, another call contract, or you go out on the open market and actually buy those 100 shares. So how does this work? So let's come over to Investopedia. Now, this is going to be a little bit of a confusing example because this goes over how to delta hedge if you are the call option buyer, but we're going to make this more pertinent to us. So as an options position could also be delta hedged using shares of the underlying stock. One share of the underlying stock has a delta of 1 as the stock value changes by $1. For example, assume an investor is long one call option on a stock with a delta of 0.75 or 75 since options have a multiplier of 100. In this case, the investor could delta hedge the call option by shorting 75 shares of the underlying stock. Now, this is where we're going to have to maneuver around this information to see how it applies to the actual institutions. Now, since the institution sold you that contract, in order for them to delta hedge, they have to go out on the open market and buy 75 shares in this example. So when we look at all of these contracts that are expiring in the money, they theoretically could have to buy 41 million shares of AMC, but not everybody is going to exercise. So again, it is possible that we do see some manipulation trying to get the share price of AMC below 40 so they do not have to do what is called delta hedging, which we just went over for these $40 strikes. But it is also possible that these contracts have already been delta hedged for because they're so deep in the money at the current time. Now, here's where this gets a little bit more interesting. At 59 and 60, there is about another 43,000 contracts that could actually run in the money. This would provide for even more of a gamma squeeze going into the next week as well. So we have a very good opportunity this week if we can hold the price levels that we are staying at, or even increase in share price over the next week to force the institutions to go out on the open market and buy shares of AMC. And that is going to create a lot more buying volume in the share price, which will just keep pushing it up and send all of these other contracts in the money. Now, there is something else that I want to talk to you guys about as well. This is incredibly important and is going to pertain to how the margin calls are actually going to start. So this is going to be the proposed rule change that we are talking about. This is NSCC-002 if you want to go look at this on your own time, and it is expected to be approved on June 21st. Now, it is possible that this actual proposed rule change does not actually get approved on June 21st. So I just want to put that out there. The June 21st date is actually the date of pushback because this was supposed to be approved back in May. So it is always possible that this gets delayed again. But let's see how this is going to affect us. So the NSCC is proposing to enhance its management of the liquidity risks that arise in or are borne by it calculating and collecting, when applicable, SLD, which is supplementary liquidity deposits on each business day, rather than only in advance of options expiration activity periods. The proposed changes would establish an intraday SLD obligation that would apply in advance of options expiration activity periods and may be applicable on any business day as needed. The proposal will also implement an alternative pro rata calculation of members' SLD obligations that may apply in certain circumstances. So here's what this is saying. So at the current time, the NSCC is only calculating the supplementary liquidity deposits around the monthly options expiration. So essentially what they're doing when they do these kind of tests is they look at all of their members and basically determine if they are sufficiently capitalized and have enough liquidity according to their standards. Now, the NSCC obviously knows at the current time that a lot of their members are massively over leveraged, and when these options expiration periods come around, a couple of their members are obviously using some of these manipulative options tactics and doing some other things to make it look like they are covering their short positions, which then makes it look like they are not over leveraged. But the fact is here that this new rule change would basically provide a way to have these supplemental liquidity deposits counted automatically every single day, which means that there is going to be no place to hide for these institutions who are massively over leveraged, and they're going to have to deal with this every day instead of only once a month. So it's going to be very difficult for these institutions that are over leveraged to continue to basically hide their short positions in FTDs, and this is great news for us. So basically what this is doing is it's providing us the opportunity to have margin calls start coming in the near future, almost any single day that the market is open. NSCC-002 is a very important proposed rule change that you guys need to keep a lookout for. And if June 21st comes around and they do end up passing this proposed rule change and it becomes effective immediately, this is going to be great news for us as AMC shareholders. But again, if it is not approved, it is not the end of the world. So that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps me out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great weekend, and I'll see you guys in the next video.